It seems like we didn't get any real drastic news over the weekend. That's a good start in the right direction. All right. As we usually do, first thing, we want to check what happened in the overnight hours and then what's on the docket for today that could interfere with our trading day. The financial juice is kind of my go to for this. I'm sure that there's other places that can accomplish the same thing. This one, you don't have to. You don't have to pay for it. It does help if you have an account, even a free one. So I would encourage you to get an account just so that you can filter out the news sources. It doesn't cost you anything to get an account, but it would give you the ability to use the filter, and then you can turn off some of the news sources that you deem maybe just a bunch of junk, right? Clickbait headlines that you don't really need popping up on your screen. Whether you use this or something else, the goal is in the morning, figure out what happened in the overnight hours, what happened in the Asian market, which is closed now, what's going on in the European market, which is still open right now. Right now in London, it's 12:30, right? So it's lunchtime over there. So midday, you want to know what's going on over in their market and what happens over there. Is it going to come over here or not? What sector was hot? What industry? Any particular names? Any sort of news? And then also they've got central bankers. They've got economic events. We want to know what's going on, who's going to be talking, and Finance Juice just does a really good job with that, especially speakers. Before I started using Finance Juice, I didn't always have a lot of confidence in whether or not somebody was going to be speaking today. And now that I use this constantly, if there's going to be a speaker scheduled to be speaking today, that's an important point, you'll very often find it here. Now, the reason I said it's an important point if it's scheduled or not is because you can still get guest speakers just pop up on places. When the S&P had pulled back off of its highs to that 20% mark where everybody decided, oh my gosh, we're in a bear market now because we hit some technical level of pulling back off the highs by 20%. On that Friday, on that day, one of the Fed speakers showed up on Fox News. Well, I don't sit around watching Fox News, so didn't see him coming, right? And he started chipping his teeth, and the plunge protection team rallied up that market up off that 20% marker. So they don't have to be in this list. They can just show up on their own. But this is where we look for who's scheduled today. It's a good start, right? They also have a nice wrap. So not only for our market and the Asian market, but for the European market, we can read this and see, okay, what's going on right now? What hit the news that it deemed important? And a lot of times it's an answer to, hey, why did the market move? Sometimes during our own trading day, we just get these sweeping gestures in the market. Like, what the heck caused that? And, maybe most of the time we can find it, but sometimes I can't. So after the market closes, I like to come in here and read the US market wrap, kind of get an idea of what moved our market today. So now we're looking at the Thinkorswim. We're on the market tab or the market watch menu under calendar. When it comes to looking at calendared events, there are a lot of calendared events, more than we've even seen so far this morning. I mean, there's Forex events, there are commodities events, grains. There's all kinds going on out there. Most platforms are going to show you the same ones, but that's not always true. So it's good to look at least two sources. My go-to is Thinkorswim, just to the neat, organized fashion, and it's what we use also when we go back and rewatch the morning briefings. Say I'm doing intraday analysis, and I want to know what was happening on June 3rd of this year on the intraday, and was there an econ event that day? Well, I can bring up the morning briefing from June 3rd. I can wait to this part of the video and see what was on the economic agenda for the day, so that the price action I see on the candles for June 3rd will make more sense to me, because I can see, oh yeah, there was an additional auction that day at lunch, and that V bottom reversal tied in with that additional auction. Today, by the way, we do have additional auctions. That is the opportunity for a midday reversal. So if we are weak or flat or not really going anywhere through the morning session, we have the potential for that to end and for a trend to begin at 11:30. If we have been trending all morning and making moves in a particular direction, we're very likely going to pause for lunch, look for that pause to end at 11:30. All right, so while these don't get a lot of attention out there, to me they're golden, and I pay particular attention to these auctions and when they are going to happen. So 9:45, 10 o'clock, 11:30. All right, as you can see, the volume is still really light this morning. Now, that lower indicator is cumulative volume in the overnight hours only. It's 7:30. We've got, about 2 hours, so there's still time to gain some more volume before we come into the open. But I would argue, that by 7:30 in the morning, I would have expected to see more volume than that, right? And I can go back to 7:30 the previous day. Yeah, we had way more volume than that. 7:30 the day before, yeah, same, right? 7:30. Okay, so Wednesday, on the day of the FOMC meeting, when we were talking about, wow, it's pretty light volume. That kind of light volume is the light volume we have today. So now we got a little bit of perspective of what kind of light volume are we looking at this morning. And it makes sense, right? We had some really big moves Wednesday afternoon, Thursday, and then Friday. We're due for a pullback at this point, right? At the very least, we're due for a pause to let the market heal itself a little bit. So what we can do today is the same thing that we can do every day. We could hold the range inside of yesterday's price action. We could break to the upside out of yesterday's price action, or we could break to the outside and the downside of yesterday's price action. That is what we can always do every day. It's what we start our argument with. What is more likely? Well, our base case argument is that we're just going to hold this range. 40.81 to 41.44. It's a reasonable range, around 60 points, right? It's not too bad. The ES has been making around 75 points a day, so this would be a muted day, right? Obviously, if you're sticking around inside of yesterday's price action, you're not advancing, you're not retreating, you're not gaining anything. But health wise, this would be a good thing, right? It'd be a way for the market to heal a little bit. But this is our argument for the day, that we very likely will just maintain this range. Within this range, we've got our high to low to high, high to low, and there are plenty of pivots to play, including the daily pivot, the VWAP, our own Globex high at 41.28, where we opened it last night, 41.37, and the high of Friday, which also happened to be the high of last week, 41.44. We can include the Globex low, 41.11, which happens to also be the COG line. The RTH low of yesterday, which happened to also be the cash open. Friday's Globex open, and then Friday's Globex low and the cash low. So plenty of pivot points in there. The argument that we want to make is if we stay in that range, is there something to trade? I mean, yeah, probably. But is something that we're going to really want to trade. Depending on the style of trader you are, you may find that it's going to be a bit difficult. Maybe a little upper's paradise, right? Set your chart to a time frame that gives you price action that you can actually read and have at it, right? I'm sure there'll be more than enough room. It's 60 plus points of price action in there. But if you're looking for concrete plays off of, say, institutional pivot points, 5-minute open range, bounce off the cash open, Busby's and wedge breaks and TRB setups, you're very likely not going to get that in a day where we are range bound in a 60-point zone like this. So play from quadrant to quadrant, zone to zone, or what I tend to do on a range bound day like this, go trade options because, well, options are beautiful for days like this. So if that's the range argument, what about a continuation of this move to the upside? If we were to break above yesterday's high, which is also the previous week's high, we've got the ADR half at 41.76 and the ADR full at 42.15. I'll add that there's a cog line 42.11 that's very close to that, and I would put that into a zone between 42.11 and 42.15. That zone would be our target if the market was just to stay doing what it has been doing, right? That's not an extreme move. It's not overly aggressive. It wouldn't even be considered out of line, right? We're talking about making a move to 42.15 or somewhere close to that, and it would just be considered another day. Easy peasy, nothing to it, right? If we were to get crazy bullish, then we would want to take that ADR and add a half to it, right? The easiest way to do that at this point would just be mark a line between the gold and the red line and then just plot that up. And that would get us at around 42.55. So if we were to just get crazy with it today, happy bullish, then you're looking at around a 121 point move, 2.82%. Basically adding 1% to the ADR. I don't see that on the agenda, but the flows have been really heavy. So, are they still here? I mean, we don't know until the market opens up today, right? So we can't speak on that because we don't know yet. But if the flows stay as positive as they were last week, it was like somebody turned on a fire hose. They've been nonstop. So we'll see if they've stopped. Okay, the other argument is if we don't stay range bound and we don't break to the upside, what if we break to the downside? Well, we do have the weekly pivot point underneath our feet. So we have our Globex low at the cog line 41.11. We have VWAP. We have the daily pivot. All of those would need to be broke. And then we have a pivot point from Thursday at the close. We have the Globex open of Thursday. Cash open of Friday. Friday's low. And then at that point, we would be looking for an inside day breakout. So we'd have to get all the way down to 41.81 just to begin an inside day breakout. Now, we can do that. Make no mistake about it. We absolutely could make a move like that. It is well within our reach. because the full ADR is very close to the weekly pivot point. Half ADR is 4180. The full ADR is 4060. And the weekly pivot point is 4063. So there's a lot of things underneath this market that we would call support, even if it's just a minor support, right? The idea that we're going to break down and underneath yesterday's range is the least likely outcome of today. Now, you guys have been watching this for a while. I've made statements like that, and that turned out to be the thing of the day, right? Where I say something like, "Oh, it's very unlikely we're going to do that," and then that's the thing that happens to be. So I don't know if it's just because I cursed it and said it wasn't likely to happen, or you know, it's been those kind of weeks lately. So we can reach that weekly pivot point today very easily. Just find that to be the least likely scenario for today. And then, of course, should things get really wild, then this 4060 is just a regular move in the market. If we think things are going to get really extreme, then we again would want to mark the distance between the red and the gold line and just plot that out one more gold line lower. And that would be a 50% retracement from the low of this last swing high, swing low, right? So from 39.11, basically the cog line, up to Friday's high. If that was our fib measurement, then a 50% retrace would put us right around a 40.28. We don't really want to see it pull back more than the cash open of yesterday, 40.90. If we pull back that far, then it would just be a part of the pullback in a trend. We've got a very narrow volume profile right now between the value area high and the value area low. It's a very narrow range. The point of control, 39.54, it's a long ways away. We are also outside of the box, which is pretty obvious. And there's just a lot of choppy volume there. Um, I don't think we're going to get a lot of help or support out of any of that should we start to pull through the downside, right? So um, when we're outside of the box, the expectation is that we're going to get back into the box. When we're in the box and we're at the lows, we expect to go to the highs. And when we're in the box and at the highs, we expect to go to the lows. That's what our expectations are. The thing is, you want to look at what we actually are doing, right? If we're out of the box, where are we headed? Are we headed farther away from the box, or are we actually heading back towards the box? And at the moment, we're continuing to move farther away. Now, this thing, it takes a little bit of getting used to when you're using something like a volume profile that goes back this far, right? We got 10 days showing here. Every new candle that we get, every 30 minutes when we get a new candle, we're losing one of these candles off the backside. And that will adjust where these volume profile plot, right? I know that may seem like a Captain Obvious thing, but when we're looking at it at this point of view, in an hour or 2 hours or 5 hours, when you come back, where price is in relation to this box will be because of more than one thing. One, price may have begun moving back towards the box, but two, the entire box can start moving towards price, right? Because this point of control is going to lose more of this volume down here, and it's going to start reading where some newer volume is. One way that you could get more familiar or more comfortable with that logic is if you take a picture of this and then you come back to it, say 5 hours later, or even the next day, and take a picture again and look at where price is now and where the entire volume profile is now compared to where it was 5 hours ago or the day before. Learn to recognize that the entire thing is going to move and shift on you. It's not like a 1 day volume profile where it stayed in place and is moving and shifting because we're getting new information. This is also going to be moving and shifting because we're losing old information off the backside. Just takes a little getting used to. So basically, consider it a snapshot in time, not a continuously running volume profile. All right, so now we're on a 5-day. That isn't 5 days, but we're going to get there. 5-day, 5-minute chart. And we want to carry forward the volume profile from the previous days. If there is anything to carry forward, right? And there is. We've got a untouched point of control from Thursday and from Wednesday and from Tuesday. I would continue to leave those marked on the chart. Now you could also bring over the value area and a high and low from Friday. And I suppose you could bring over the point of control too, but we've already hit that point of control. Now, some people argue that it doesn't really count since it was like a part of the move right at the beginning of the day. There's also an argument that could be made that says, well, we hit it in Globex um, and it doesn't count. You take that any way you want. The idea would be, however, to be consistent however you choose to do it, right? As far as I'm concerned, if we've crossed through it, at least one direction, but definitely both directions, if we dropped it down through it last night, and if we now break through it to the upside, then as far as I'm concerned, we've gone through it, right? Does that mean it won't hold any validity now if we happen to come into that? No, I don't necessarily believe that. I think that should we hit that spot again, there's likely to be some reaction in the market. You might want to know where it is, but it would hold less weight for me now that we have passed through that multiple times, right, than if we had not passed through it at all yet. So those untouched point of controls, 40.73, 39.76, and 39.27. So they're spaced out about, well, these are spaced out about 100 points apart, and these are spaced about 50 points apart. So you could also bring forward those value area highs and lows. I just don't, I've got enough pivots. I don't need to do those two. All right, we're on a daily chart. The white line running from left to right is a linear regression line. We keep track of the swing highs and swing lows off of that linear regression line. And from the last swing low of 613, right around and then, we've crossed over that linear regression line and we're getting close to the 4200. The 4200 has a lot of impact right now. It is the top of the weekly expected move. It is where the year-to-date anchored VWAP happens to be laying. And depending on which moving average pair you use, there's a major moving average sitting there. It also has a price cluster when you look left to that late May, early June timeframe. Right, so there's just a lot going on there as we come into 4200. There is also a lot of options in that area. If you go and look at, say, uh, options blocks, and there are dark pool prints there as well. So there's just a lot going on. The analysis right now, as much as everybody wants to believe that this is just going to flip over and crash down on our heads, the sorry junk earnings that we've had this quarter so far, as sorry and as junk as they are, when we pair that with what people perceived to be dovish statements out of the Fed, we're just straight up in some bullish flows. And until those flows at least start to back off, or we hit that resistance and actually prove to have hit some real resistance, that it did resist us, You want to continue to play what you got, right? And what you got right now is the market ready to take a pause, but not necessarily dump down on our heads. I want to point out something that I was looking at over the weekend. The orange line on my screen is a 50 period daily moving average. And there's two orange lines because one is an exponential and one is an simple moving average. And these price markers here help highlight where the swing high and the swing lows are, right? So for every pivot point. And when we talk about getting a full set of pivots, we talk about getting higher highs and higher lows in a pair of twos, two higher highs and two higher lows. So those price markers will help you identify, are we getting two higher highs yet, or do we have two lower lows yet? So since this low back here, obviously we haven't retested those lows, but we also broke through the 50, which was a major level of resistance. And then we pulled back and we validated that old resistance as a new support level before continuing the rally. That's the first time we've done that this year. And that is absolutely bullish. We're above the 50. We're above the 20. We're above the 10. And we're above the 4. That's trend, momentum, strength, and surge. Now, it is worth noting how far above these moving averages we are, because they act a lot like a center of gravity or the center of the basketball court. If you get too extended past those moving averages, you're very likely going to pause and let those moving averages get caught up, or you're going to pull back towards them and accelerate the pause, right? So that the pause doesn't happen to last very long. 410 is a surge. There's your 4 and 10. When the 410 crossover and price crossover, you can read that through various degrees of the strength of the surge, but that's a surge. .410 momentum. Whether the 1020, excuse me. So whether the 10 is above the 20, whether price is above the 10 and the 20, all of that helps you gauge or define how much momentum is there. But this is the momentum indicator, right? Or the momentum tool set, 1020. We're above the 10. We're above the 20. They're spread out nicely. They've not curled. They're not flattening. They're not rolling over. But we are a long ways from them already, right? So again, how far away from the 10 we are, especially that one. I monitor that constantly, made my own indicator just to do that. How far away from that 10 period daily moving average we are has a lot to do with whether today is going to continue to advance farther away from that, or pause here and pull back, or straight up pull back, right? No pause. Trend 2050. Same thing as with all the other moving average pairs that we've been talking about. The combination of this pair, the strength of the trend, has every bit to do with if the 20 is above the 50 or not, if price is above the 20 or not, right? So we can say that there's trend or not trend, or various stages of trend by where these moving averages line up with each other. But the 50-20, that's your trend, right? So what did we have? Surge, momentum, trend, strength, 5,200. Same thing with this one as with all the others, whether the 50 is above the 200 or below it, whether price is above them or below them, defines our strength of the market. So when we put all this together, we've got a bullish surge with bullish momentum and bullish trend with bullish strength. So all those bobbing heads on TV talking about we're in a recession and it's going to crash and burn and this is just a bear market rally and blah. Okay, trade what you got. We're very likely going to pause here because of how far we've extended in the last few days. But don't let that pause make you believe that we're just going to dump and crash and burn because we're in a bear market. Play what you got. Now, keep in mind, we're very likely not done with our lows, and that we could see the same lows again, and even get newer lows before this whole thing is finally done. Right? This situation could last for years. So we just don't know. And this is very likely going to be the last reasonably decent earnings quarter we're going to get for a while. Then there's the idea that, winter's coming, and Europe's got this whole situation with gas, with energy. You know, the German businesses are in an energy crisis. Um, you got the war with Ukraine. Still got China that can do lockdowns. So there's a lot on the table for why this may not be uh, the last, right? And why we could come back down again later on. But until you get technical analysis that says we're headed back down, trade what you got. Keep your eye on the euro US dollar. We're looking to see if it's going to break this range or not. Very likely to cause us some impact if things start to get volatile again. We had some pretty sweeping big days last week that big moves that didn't go anywhere. The big, the hamster on the wheel running around, a lot of energy right back where we started. And US dollar Japan, we broke that longer term channel. And so far, I mean, we're right back up to being inside. We're actually wicking right back out of it again. We're flirting around with the low of yesterday. Keep your eye on that. Energy, bonds, the dollar, they're the catalyst for our market right now. So the dollar inside day breakout managed to come back inside again. Bonds are holding above that 4-period daily moving average. That is a surge level, right? It's the 410, the 4 that we were talking about. Look at yesterday where we hit that 4, built on it, wound up on it, explosive move through it, and up to an inside day breakout by the midday of Friday. Didn't keep it, didn't hold it, but this morning we're back above VWAP. So keep your eye on the bonds. We don't want to see big sweeping gestures here. We want this thing to calm down, take it easy, not a whole lot of rocking around. Just maintain the range, right? And basically, we're sitting in the middle of the range at the moment. Oil broke 96 last night. Had a very sharp, very steep liquidation break, and we didn't see a lot of outcome from that. I was a little bit surprised, but we traded what we got. Continue to keep your eye on oil, see if it's going to hold back above that 95 or not. I don't think we're done with the highs in oil or in energy, but there could be some more consolidation, even some new lows first before we get done. And the VIX, I've mentioned it a few times. There's been some odd signals in there lately where this thing actually has been moving first, confirming a move, or at least confirming what we hadn't even seen yet. Right, and it starts to make a move, an extreme, exaggerated liquidation break, and then we see it reverberate through the NASDAQ and the S&P. So hey, as long as it's given it, I'm taking it. Right, keep your eye on it. Most of this year, this thing has been worthless. So it's hard to actually look at it now with any sort of respect or trust. But it's not like I'm going to go pull the trigger just because this thing moved. But it certainly gets my attention. It's a nice little early warning heads up. If this thing starts to make a liquidation break and starts an exaggerated run in one direction, I start thinking about what an entry would look like for the ES and the NASDAQ. Gold inside day breakout's got a nice flag right now. It's a sexy little flag. I mean, it's starting to extend a bit too far for my taste, but we do have a nice flag there on that inside day breakout. May get one more VWAP bounce. Yeah, well, we might get one more touch of that VWAP. Whether we bounce on it or not remains to be seen, but I wouldn't be surprised if we do retest it. If we continue to maintain this range first, say for another 30 minutes or an hour, the VWAP is likely to line up with yesterday's high. So then it'll be a multiple pivot point play. Bitcoin, significant gap down. Right now it's flirting with its VWAP. Big liquidation candles. Um, it looked like Thursday and Friday that Bitcoin was going to participate with a lot of this move up. And I mean, it did good, but certainly weaker now than the indexes. So that could be an early warning of the risk off coming back in. We don't look at Bitcoin for a correlation or comparison. We're just looking at it more as it is a pure risk on, risk off gauge, right? This is pure speculation, like going to Vegas, kind of throwing the dice, ready to gamble, ready to speculate. That's Bitcoin in a nutshell. So when we see it bidding up, it shows an appetite for risk. That's it. That's all I'm using it for, right? So a lot of this is flat. My benchmark in the sand is around a half of a percent. And when we look at, what's moved more than a half of a percent, either up or down, energy, more than a half of a percent, Bitcoin, natural gas, IWM is near that, but not quite there. Emerging markets, which is what we use for like that global risk on and risk off, isn't even at a half yet. That's also where we find, the NASDAQ, the Dow. So half of a percent looks like marijuana fits that category, up more than a half of a percent, but not a lot of liquidity presented there, right? Like it's just one print. So those old school legacy S&P sectors don't really break things out as much as I would like. So we kind of made our own. We look at that crypto list, break it down into, names that own a lot of blockchain or have invested a lot in blockchain versus names that hold, say, a lot of coin. So when we see names that are up in the crypto list, like PayPal, AMD, obviously they're not coin names, right? And they belong in their own sector or industry or sub industry, the chips. Mara, Coin, Taiwan Semiconductors, Riot, all down pretty heavy this morning. All right, another legacy sector workaround is for the EV market. GM is basically flat, and couple of names that are a little squishy, a little soft this morning, but Ford is up more than half. XPEV, Liato, Neo, Ride, all of those up more than that benchmark level of a quarter or a half of a percent. And of course, Tesla up, nearly 1.5. That white line there on the chart is a year-to-date anchored VWAP. It's another benchmark for, how good a company is doing on the year. Things are looking reasonably decent in the pot names this morning. We continue to look at these because they provide a different perspective beyond things that are going to correlate with the S&P, right? The bonds, the stocks, commodities, precious metals, pot stocks, try to diversify into, a lot of different perspectives. If 8 out of 10 things out there, 8 out of 10 companies, 8 out of 10 products, they're all following the S&P, then we want to look at things that wouldn't do that, right? That way, if it is a range day today, if we are looking at a market that doesn't really want to advance, but instead wants to consolidate, perhaps focusing on something that isn't doing what the S&P is doing is a good play, good choice. Pot stock often fit that bill, right? Kind of a mixed bag in there. Pull the stems, right? Pick out some seeds in this one. Not seeing anything that really stands out that would get me moving in that direction. Trying to approach oil from multiple directions or energy from multiple directions, and none of it is looking good. Airlines are looking nice this morning. Not by much, right? If we're using that benchmark of a half of a percent, then we're not really there yet. But the fact that they're positive, kind of moving in the right direction, it's still early, right? It's only quarter after 8. So these have the potential to continue to kind of move around a little bit. And there's nice overhead. If you think about how far, all the tech names, the legacy S&P FANG names, NYSE names moved last week. Then you look at something like airlines, which really didn't participate in that move yet. Got some nice upside move here if we are to see a capital rotation. We're talking day trades though, right? We're not talking swing trades here. All right, guys, it's my day to stream. I will be in stocks and options channel around 9:15. We'll see what we come across at that point. It's price discovery, right? It's what happens on Monday. We got to let the market absorb all of that news from the weekend, start pricing it into the market. It usually takes a good 30 minutes or so, and then we get an idea where we're headed on the week. See y'all there.